How are you seeing the world as we speak?
There's a lot of uncertainty.
What you were saying in the interview was
Meta, for example, was languishing around $80 to $90.
And AI, could you just elaborate a bit on that for us?
your view on the possibility of a Labour government.
Europe, I left out deliberately because growth is a problem.
Welcome to this edition of Talking Markets. I'm Michael Wilson, and my good friend and veteran city commentator David Buik joins us. Very pleased to say our special guest on this edition of Talking Markets is Sir Martin Sorrell, who many of you will know about WPP, a company he founded a long time ago. He's since moved on, of course, as you probably well know, to S4 Capital. Advertising has always been one of those industries that tends to look ahead, doesn't it?
Absolutely.
Really, and to what's going on, and therefore so pleased that we've got Sir Martin and half an hour in his busy timetable. So on that note then, Sir Martin, what do you here's a really terrible broad question for you to start with. How are you seeing the world as we speak? What's your kind of thumbnail on where we are right now?
I guess uncertain is probably the word. And our clients dislike uncertainty. There's less uncertainty than there was this time last year, I guess, because the experts like you say interest rates are, well, maybe you don't, but some experts like you say interest rates will be coming down, although we seem to be delaying the evil day or the good day for that. This time last year, people worried about interest rates rising. And I think the key uncertainty from a commercial point of view is when will interest rates fall? I mean, Jamie Dimon comes out with the letter yesterday, which says that interest rates might rise to 8% because inflation will be a little bit more stubborn than people give it credit for. Now, to be fair to him and what he said, we were anticipating the interest rates will be coming down maybe as early as this month, April or May or June. Now some people are saying that the Fed will push that out maybe till the second half of the year. Some people even saying maybe not at all this year. So there's a lot of uncertainty developing around when interest rates are going to fall. I mean, if you look at it from a long-term perspective, they're not exceedingly high at the moment, but we'll see, I suppose, real interest rates. And inflation is really down at trending towards 2%. Interest rates are stuck at 4 or 5. The real interest rate is very high from a historical point of view, and that may well be choking off investment and people making let's say, advantageous decisions from an investment point of view. So I think uncertainty. So uncertainty in the commercial world and then uncertainty in the political world. You've got three events which business, by and large, can't do much about. The first, I suppose, US-China relationships or the lack of them. I mean, there's a sort of twin track at the moment with China. On the commercial side, Janet Yellen's just been there again, I think, for the second time. In quite a short period of time, and there is more communication on the business side, and decoupling from an economic point of view doesn't seem to make much sense for both sides. But from a political point of view, there is decoupling. So you have this sort of twin track with US and China, and it's doubtful if whoever wins the November presidential election in the States, it's unlikely that those relationships will shift dramatically one way or the other. The second area, obviously, is Russia and Ukraine, and the support for Ukraine seems to be wilting, and therefore Russia seems to be making some advances, and there's a whole question mark about what Russia's ambitions are. The third area, obviously, is the Middle East and what Iranian ambitions are in that region, and we're still waiting to see what their retaliation might be for the latest strike by the Israelis into Damascus. And then, of course, other things like North Korea. So from a political point of view, and business can't do much about that other than alter its strategy to take into account these uncertainties. But apart from that, there's the commercial uncertainty, as I say, around interest rates. So simply put, uncertainty is still at uncomfortable levels, but it's better than last year. I mean, last year, I think it was worse as people were anticipating steep increases in interest rates.
I mean, you've mentioned obviously the key points. We've also got, I think, a total of 70 elections of some shape, size, or description throughout the whole world. And one question I wanted to ask you very quickly before just asking about, in my opinion, that you've always been one of the best barometers of economic activity going around is, do you think that the Bank of England and the European Central Bank could decouple themselves? Because there is talk of many economists in this country thinking that inflation in the UK could be down to 2%, if not lower, somebody said to me the other day, by May. And it seems that Madame Lagarde is very reluctant not to cut interest rates, that they could go despite the United States, or would that make the dollar too strong?
Well, I think the irony is that this time last year, people were expecting, or not this time, like let's say 6 months ago, they were expecting the US to move first or the Fed to move first. Now I think people are expecting the Europeans or the British to move first. So we did see the Swiss bank, I think, reduce rates from around 2%, 2.5%, I think it was, maybe even less than that. So from a very low rate, even lower. So there has been some precedent for it. It's possible, I guess. We're in election years, as you say, for half the world's population, and politics does play a part in all this. Despite what people say about the independence of central banks and political considerations do come in. I think in the UK, it's probably highly likely we'll get another budget before the election is called. I mean, the Conservatives, to try and resuscitate their support, may actually go with another budget, maybe an election sometime in November after the American presidential election, and a budget after the conference, the Barty conference, I think is in September, and maybe they go in November. I think they'll leave it as late as possible, given the pressure that the Conservatives are under. So we'll see, but it's possible, David. I don't know as to whether one will go in one direction, one go in the other. The key issue, I think, for our clients is when the uncertainty from this is removed. I mean, clients like to postpone things if there's uncertainty.
Is that why when you were interviewed about the recent drop in the share price of S4 Capital, and again many reasons for that, but what you were saying in the interview was that you felt that somehow the growth would come back later in the year. That seems to underline what you've just been talking about. In other words, you seem to be looking for more certainty as 2024 goes on.
Well, the comparatives get easier. It's all about comparatives at the end of the day, isn't it? So the comparatives get easier in the second half of the year. So it should be. But in our particular case, about 43%, 45% of our revenues, we have about £1 billion of revenue, that comes from tech companies. And the tech companies last year, it was quite a slightly strange situation last year. With inflation last year, packaged goods companies were increasing prices by 5, 10 or 15% on a quarterly basis. And they kept their ad to sales ratios the same. And their ad sales ratios, so their advertising budgets increased. And the packaged goods companies didn't put their money into linear TV. We saw that the free-to-air networks like a CBS or ABC or NBC, their ad revenues, particularly if they didn't have live sports to boost them, were down by 10 to 15% last year, their ad revenues. And if they had sports to help them, down by 5 to 10%. Whereas the platforms were up by 10%. So what happened was those packaged goods companies poured their money into the platforms, into digital advertising, which now accounts for 65% of the media industry. The media industry last year, advertising industry, was about 950 billion. So it'll get to $1 trillion this year. And of that 950, 650 was in digital. And that grew last year by 10%, whereas linear TV, which dominated the other 300 billion to take it to 950 billion, was down by around 10%. Hence the issues that, for example, Bob Iger is facing on his return to Disney with ABC, and what he does with the free-to-air network, or what Paramount and Sherry Redstone is trying to do in terms of a deal with other networks or other film studios. So, what you're seeing, what we saw last year was a slightly strange phenomenon where we had those things at work. And at the same time, the tech companies, with the money pouring into the platforms, the tech companies reduce their advertising spending. So Facebook, for example, Meta, cut their ad spending by about 20 to 25%. So their margins expanded. And you saw what happened on the Facebook share price, or the Meta share price. It was languishing at around $80 to $90. It's now well in excess of $500. It was up, I think, to a record high yesterday, on the back of a year of efficiency and improved performance. And the tech companies as a whole continue to do that too. So I think last year was a difficult year for us. It was the first year in our 5-year existence where we went backwards in terms of revenues. Previous years, our net revenues were increasing by 40%, 20%, another 40%, and then 26% in 22, and in 23 went back by about 4.5%.
So, I mean, when I used to first listen to you too many years ago on CNBC, always giving very good inputs, you attached, or your industry attached, a lot of credence and importance to things like the Super Bowl and the Olympics, which obviously we've got this summer. They are presumably going to fall into the background in terms of importance of the overall industry. Is that right? And whilst we're on that, can I just say that the new thing on the block for many of us is, of course, the contribution, hopefully mainly positive, but possibly negative in some cases, of AI. Has that changed?
No, I think what we used to call the maxi quadrennial, which is the presidential election and the Summer Olympics, falls in this year. The mini quadrennial was congressional elections and the Soccer World Cup. And we used to plug in about another half a percentage point increase in growth for the mini quadrennial, and 1 full percentage point for the maxi. I don't know whether that rule as we established, or that guide or direction is the same today. I think it's probably a little bit less. I mean, for example, I was talking to a journalist who was writing a story on the fact that, or on the implications that many IOC top sponsors, a few of them, will be cutting back on linear spending, following what I just said, actually, about linear TV advertising spend, and spending more on digital. Now, that should be a net increase, but it will be a net increase for digital rather than for linear. But it's an indication, I think, of the way the world is going. So I wouldn't, David, put a tremendous reliance on what we're seeing in terms of the elections. I mean, the presidential election in the US is going to drive media prices a bit, and there will be heavy spending. Biden's campaign seems to be well breached, and he's been raising more money. President Trump is also on the lookout for more money as well, as we've seen. So there will be both well-financed campaigns, legal expenses for President Trump aside. They'll be well-financed, and for Biden as well, I guess. But they will be well-financed campaigns, and they will stimulate media spend. So it will have some impact. The Paris Olympics, I think, take up so far has been, for hotels and events, has been a little bit on the slow side. But I'm sure that when the event starts to come into view in a couple of months' time, the hotels will fill up. Prices are quite high. I mean, I've heard, I was in Paris a week or so ago, and the hotel prices and traveling prices and restaurant prices are quite high. And so I think there is some concern about that. But I think when the event is in view, we'll see a speeding up of it. So it'll have some impact, but not the impact I think it used to have.
And AI, could you just elaborate a bit on that for us?
Yeah. So look, AI is having an impact in five ways so far in our business, and there will be other ways. The first, what we call visualization and copywriting. So making video, making pictures, and writing copy. I mean, that can be speeded up to a tremendous degree by AI. So what took us 3 weeks takes us 3 hours. Now that's a two-edged sword because we sell hours, we sell time. We should sell outputs, but we do sell time, and that means that clients will say to us, "Look, it's taking less time. We want a share of that." So we will share that benefit, that productivity benefit with them. So that's one area. So I think that's a mixed result, maybe resulting in reduced employment. Then the second area is hyper personalization. So what I call the Netflix model, this model where you get personalized communication based on what your likes are. We know that the two of you like business, so you serve you a piece of content around Rebel Moon or Narcos, which positions the content as related to business, or we know you're a Manchester United supporter and around football or whatever it happens to be. And depending on your reaction, we serve you with another piece of content. Now, in a situation like that, we might theoretically be able to produce about 1.5 million assets, at least mathematically so. With AI, we can do multiples of that. So we are starting to see, and we've got some significant things going on at the moment, starting to see development of content programs which look at that area in particular. So that's a real big opportunity. So the price of every asset will be reduced, but the number of assets we sell will increase disproportionately. And as a result, revenues will rise, and I think employment will rise. So that's the second area. The third area is media planning and buying. The platforms, namely Alphabet or Google or Meta or Facebook, have already had programs for small and medium-sized businesses for media planning and buying, driven by AI. At Google, it's called PMax. At Meta, it's called, or Facebook, it's called Advantage Plus. You can actually track with Meta the success of that. And small and medium-sized businesses are already using AI. And AI has been in development for a number of years, the last 10 years, since 2014 for Google, for example, with DeepMind. And with using these programs to plan and buy through using AI and AI tools. That is going to have huge ramifications, I think, at an enterprise level, and the platforms will develop closer relationships, and we will become even more validators for investments in those platforms. So our role will become increasingly important, but as a validator for the planning and buying of the algorithms spit out, particularly in that digital sector I mentioned, the 650 billion and the 950 billion, which is going to 70% of the market by 2025 and will go on to grow even more. The fourth area is general efficiency for agency and client. So I'll give you an example. We have an exclusive integration arrangement with NVIDIA and with AWS and Adobe and outside broadcasting. And in that area, we can reduce the cost of an outside broadcast from, well, you have to buy a truck for about 9 million for an outside broadcast dollars. You amortize it over 5 years, about 1.5 million a year. And we can reduce that cost by using AI in the cloud to about $100,000 or $200,000. So you're talking about an 80-90% cost reduction in terms of outside broadcasting, which for those linear broadcasters, which I said were being challenged by advertising revenues falling, is really important. So that's a good example of efficiency. And the fifth and final area of interest is really sharing knowledge inside the company. So, we have 900 people working on Alphabet around the world out of our 8,000 people. If we can link them together effectively and efficiently through using information, that is a real bonus in terms of efficiency. So net, what we're seeing already is significant impact on the industry, particularly in the first two areas I mentioned, visualization and copywriting and hyper-personalization. Media planning and buying will take longer, but that's going to be very significant over the next 3 years. Efficiency already starting to impact the industry, as I mentioned, outside broadcasting. The knowledge sharing is starting to develop as the LLMs develop around the world. So I think it's full of promise. In terms of impact on employment, it's going to vary. In that first area, I think there'll be a net reduction. Second area, an increase. Media planning and buying for us, it will be really interesting. A big opportunity for us against the holding companies, for example, who typically have 10 or 15,000 people in one media network, and there's about 200,000 to 250,000 probably employed by the industry in media planning and buying. General efficiency, probably some opportunities for increasing employment, actually, and knowledge sharing, I would say the same. So mixed. I think overall, I'm probably, it's interesting. I was listening to a couple of interviews by, actually on CNBC, one with a major hedge fund owner, the other one was with Barry Diller, both of them saying that Steve Cohen was the other one. Both of them saying that we'll go to a 4-day week, not in their businesses because they want their hedge fund managers and they want their media executives there 5 days a week, but we'll go to a 4-day week. People will have more holiday time, more work-life balance, particularly with work from home and metaverse and technologies being the way they are, which was interesting because it's the first time I've heard people at that level acknowledge that that's the way that's going to go. Where the 3-day weekend was being played out there, and in that environment, AI is going to play an extremely important role, and a lot of this will probably be AI driven as well because it will enable people to be more effective, and probably Keynes will end up being right. I think he wrote 100 years or so ago
about that, yeah,
holiday time because of automation, and maybe that's where it's going to go.
What do you? Thank you very much indeed for your tour d'horizon so far. Can I bring you back to the UK and obviously?
I was at a very depressing breakfast this morning where the guy basically said to me, the UK is a rounding error, basically. Very depressing.
Oh God, very sorry to hear that. Anyway, Michael, go on.
No, just
well, let me be very direct about it. You specialize in the stock markets. I mean, the liquidity in the markets here, the fund managers here are dwindling in size. The pension funds have reduced their investment in equities from 47% of their portfolios to 2%. The government has done a limited amount.
If I may interject and say pathetic amount.
I was always struck by the fact, or I have been struck by the fact that if you do a screen of the 100 most liquid stocks in the world, there's not one of them that's in the FTSE 100.
No, that's right. Because we don't have the investors because they're not encouraged to come here. Anyway, Michael, you...
well, only just Sir Martin, if you would, just your view on the possibility of a Labour government and whether or not they're going to be business friendly. It's easy to make promises.
I don't think it's a possibility. I think it's a probability, isn't it? The question seems to be at this stage, what will be the size of their majority? If it's a large majority, maybe that will encourage the left wing of the Labour Party to be more active. I think Labour's Achilles heel so far, and there's been very little detail, and if I was them, I would restrict the amount of detail because you don't want to get caught out on the devil will be in the detail. And I doubt we'll see it much in their manifesto either. I think they'll say we have to look at the books before we say what we're going to do. But the Angela Rayner labour laws or change to labour laws is the Achilles heel. And I think business has been welcoming. It's the Tony Blair, Gordon Brown playbook, which Peter Mandelson and Benweg Prosser at Global Council, I think, are pushing them to do, which is engage with business, go to Davos in business breakfast. Rachel Reeves is very articulate and smart and seductive. So I think business has been charmed by them, but I think that Rayner foray on labour laws is a warning sign and is their Achilles heel. So I think Peter Mandelson is right when he said, they need to consult with business on this because it could be quite damaging to productivity and hence investment. So I think, and if Labour get in, many people say they'll be in for 10 years and 2 terms. I'm not so sure that's necessarily right, but we'll see how it plays out. So barring a significant shift, if the election is in November, and if Trump wins in prior to the UK election, that might have a slight positive effect for the Tories. But reform is clearly at 12%, is clearly having an impact on their vote. If you look at the stats, Conservative voters are down, Reform voters are up. So Reform is taking away, and it depends, of course, how many candidates they field and where they field them, as to what impact it will have on the first past the post system. So, I think it's sort of becoming inevitable that Labour will win. The only question is, what is the scale of their majority? As to whether they will be able to arrest the issues that we face, that's another question. We have to see how that shakes out. They won't have much room to manoeuvre, given the state of government finances and the deficit.
I think disaffection plays, quite a big part. I would like to end, if I may, on one, getting back to your business, which I learn about all the time, which I so much enjoy, is that one of the things that struck me in the last 10 years is that the quality of people that your industry employs, and the same applies to banks, in terms of education and what they've got, is far, far higher when people like me, 60 years ago, just had to rattle a door chain and probably get in the front door. I think your industry, in terms of particularly PR and also advertising, is taking away a lot of revenue from the investment banks, because you can give very, very good advice at a less cost than they can, and with very positive results. And one of the things I was going to sling in was, I was talking to a small company at biotech the other day, and he was telling me about AI and how it's had a fantastic effect on getting drugs approved. What would be a 15-month journey ends up being 5 weeks. And in the area where I believe that advertising and PR can do a fantastic job with their clients, is actually selling the goods and chattels and the positive things about AI. Am I about right, or am I wrong?
Well, I don't know whether you can abstract or draw from the healthcare industry. You're right. I get news feeds every day where there are incredible reports of incredible advances through AI. By the way, I have to call out the metaverse, for example. The much maligned metaverse, which I think was overhyped maybe, but is now underhyped. In medical and training and sports and entertainment and music, and work from home, work from anywhere is having an incredible impact. There's been some very good advertising that Meta has done recently, where one surgeon says, I practiced 200 times on the metaverse, this operation, before I performed it in reality. So look, I don't know whether you can draw on that and say about PR firms. I don't think you're right, David. I don't think that PR firms will undermine or undercut. They might supplement what investment banks are doing, but I don't think, I think that sounds like, to me, you've been talking to too many aggressive PR people who are never short about confidence in their own abilities. That's for sure. So I'm not sure that if I was engaged in a transaction, I would go to my PR counsel for investment banking advice, or necessarily vice versa. So I think they both, to be fair, have their roles. I think what you might be right is that the private equity houses have seen the benefits of investor relations and public relations, and they've invested, because you've certainly seen what 3 or 4 of the PR groups have private equity backing. It's going to be very interesting, as when there's the rush for the door, as there always is for the exit, which ones are going to go first. Whoever goes first will probably do better than those that have to, after the Lord Mayor's procession comes the dust cart, as they say. So we'll see how that pans out. But I think you are right that it has become, that profession has become more prominent. But I don't think they're taking fees from the banks. I think they worked in harmony with the banks, and people have realised that communications are critically important in that process. But I think private equity, who dominate, I mean, there've been less so last year, and there've been less exits last year, and the dry powder has been building up inside the private equity firms. I mean, there's been a bit of momentum in the last few weeks and months as that prospect of interest rates falling has come to pass. I mean, when and if interest rates start to fall, we'll see more activity. Whether it's going to be short-lived, as Jamie Dimon says, is a possibility. We'll have to see. But I think inflation is going to be more stubborn than people think, and I think the world is going to be slower growth. It's not going to be like it was for the last 40 years since the mid-80s. It's going to, instead of growing at 3, it's going to be growing at 2, and the developing parts of the world, the E7 or even the E6, excluding China, match or outdistance the G7 or the G6, excluding the US. I mean, the truth is those markets are becoming more and more important. So in a world which is slower growth with more stubborn inflation, higher inflation than people predicted, and higher interest rates, selecting your geographical markets is critically important, and also being efficient. So that's where AI and quantum computing and the metaverse and blockchain, I think, become really important technologies to improve efficiency. So I think those are the two things that are really important. Pick your market. So North and South America, the Middle East, and Asia, with a question mark over China because of Taiwan. India and Indonesia and Vietnam benefit, and Singapore, Malaysia, Thailand, Philippines benefit as a result. Europe, I left out deliberately because I think France, Germany, Italy, Spain, and the UK are volume markets. They're really important markets, but the growth, most of the clients I speak to, without exception, say growth, is a problem for them, and they look at it more from a cost point of view. So efficiency and AI is going to become really important, particularly in Europe, but also across the world in that slower growth world.
So Martin, thank you very much indeed for sharing those thoughts. And please join us again. That was Sir Martin Sorrell, and thank you very much indeed. Great guest, wasn't he? Great man as usual. Look forward to talking to him soon. That's all for this particular edition of Talking Markets, but we'll be back again soon. Do join us then.
Please.